Hello, chart watchers, and welcome to this Wednesday, July 31st, 2019 Chartwise Women's Show with your hosts, Erin Swenlin and Mary Ellen McGonigal. We are so glad you are joining us today, and we hope you will come back every Wednesday at 3 p.m. Eastern. For those of you joining us for the first time today, welcome to the show, and hope you become one of our regular viewers who I would like to welcome back. All right, Mary Ellen, quite the day in the market, huh? We'll be getting more into that, I think, later.
You bet, indeed. It started out pretty placid after that Fed rate cut decision, but boy, Chair Powell is out talking at a press conference, and investors do not like what they're hearing. We're seeing a pretty significant drop-off here.
Yeah, absolutely. Let me go through the agenda here, and then I want to show a couple charts from our market summary just to visually show everybody what's going on in the market. But we're going to have our wisdom of the week. We're going to do KISS, not the band. And we'll talk about our toolbox. We're going to add a little bit more to the Chartwise Women model for you. What's cooking, data farm to table. We have some great ETFs. We thought we would concentrate on those. And then we always finish with one of our favorite segments. I think it's my favorite, though, honestly. Yeah, that happened. So with that, let's go ahead. I'm going to show you what we're talking about as far as the market. And right now you can see a big drop for the S&P 500. We're actually down a little over 1%. Really getting hit hard would be the German DAX and the French CAC, but we're really more interested in what's going on with the S&P. And then look down here, the Russell 2000, these are our small caps. These are the ones we really do want to see doing better relatively. And actually, it looks like they are. They're only down about 0.5%, whereas the market itself is down over 1%. Yes, the Fed rate cut, a lot of times it just, we talk about something being baked into the market. And usually that's what we're seeing. The markets don't get too swayed. What do you think about baked in?
Yeah, as a concept, we were talking about this before the show, the fact that the Fed did cut interest rates by 0.25 percentage point, and that's what everyone was expecting. So we really didn't see a reaction initially. There was just a lot of sitting around. It's not until now, of course, that I talked about Powell is out giving his reasons as to why, and there seems to be quite a bit of pushback. So,
yep. I mean, it did hit a pretty low, did go way down here, but it looks like it is starting to catch back up. It is now down just a little over, a little under 0.75%, just as we're talking.
That's right.
All right. Well, let's go ahead and move into our wisdom of the week for you. And Mary Ellen, I'll let you start with your wisdom of the week.
Yeah, I would say that the best traders that I know, I work certainly with a number of people, that they keep their routine very simple, and there's no reason to complicate the markets. The markets can, of course, be complicated, but as far as your system relative to investing in the markets, keep it simple. It's really it serves you well.
Yep. And, and simple meaning, we're going to be showing you this model that we keep putting out there, just, with very simple pieces to the puzzle. And so it just doesn't have to be complicated to be successful. And I can say that with Decision Point, we do that because we use that KISS as what I usually put on my slides for that. So KISS.
Yes, to explain for anyone that doesn't know, it's keep it simple, and we're not being, keep it simple, stupid.
Yes.
But it's an acronym. And by the way, before we get into our system, I wanted to remind listeners and viewers that you and I are going to be up at the San Francisco Money Show in 2 weeks. And one of the presenters there at the Money Show is going to be Gene Simmons from KISS the band.
Are you kidding? I had no idea. Now I'm extra excited to go.
But I digress.
Yes. All right. So keeping it simple, like I said, we're going to bring in a few of our favorite tools. But why don't I'm going to have you go first, Mary Ellen. What is your simple routine? I mean, what do you usually do to keep it simple?
Yeah, so I'm going to go ahead and share my screen and I'll just give a little bit of insight as to ways that you can keep a given system simple by using StockCharts.com. My first go-to is, of course, you want to see where the broader markets are. So right here in this center area, it's giving you today's action. And of course, you can pull up a chart and take it further. Once you get a feel for how the broader markets are, from there, I want to see where is the strength. That's going to be my fishing pond. I want to be in those areas of the market that are outpacing. So this is a view of the various sectors within the broader markets. And today it's simply providing you with that performance on a daily basis. But quite simply, we can go back, whether it's 1 week or 1 month, and really capture where the money flows are going. Where is the strength? And we can see immediately that it is technology. Communication is going to be an adjunct to technology. This is going to be a lot of internet related stocks. So now I know where the strength is. This is where I'm going to drill down. And then, of course, Erin, as we display and reveal our system, that you can then refine and drill down into those areas of strength. That's a very simple system.
Yeah, absolutely. I'm just going to share my screen briefly, and it'll give you an idea of what I do for my trades, for a decision point trade. I'm not going to go into huge detail, but for me, the first one is the big picture, like you were showing. What are the markets looking like? Where is that strength? I need to know that before I even consider getting into a trade. For example, when we were in the bear market, when things were starting to really slide back in December, I was looking more toward cash. I wasn't interested in finding trades. I mean, you can certainly find trades where you short, you pick something that you expect to go down, and that's how you would make your money on a short. But the risk level there is a lot of risk in there. So there's your sector analysis, like you were just showing, Mary Ellen. And then I do scans on my momentum oscillator. I sift through those, I make my pick, and then you determine where you want it to go and where you want it to stop. So really, it's just a basic strategy that I use. And like I said, our tool, the tools that we're going to reveal here as we go along, really fall into what those are.
Very good. Yeah. So again, having a system, and I would argue that that system would need to speak to your an individual's belief in the markets. So if you are a Buffett style investor, or do you believe in these faster moving stocks, of course, that system would naturally need to work with your ideology. Yeah.
Right. Exactly. And so we give you the tools here pretty quickly and easily to do that big picture analysis. And you need to kind of get that feel for what's going on. What are the trends? And a lot of people were like, well, why, what did you do when all of that, the market was starting to go downward like it did? And, of course, all my friends were asking me, and I don't know, I would imagine you got the same thing. What do we
Yeah.
do? What do we do? And my advice, as we had started pushing down on that path, and I honestly expected it to go even lower than it did, my strategy at that point was, hey, this is not a good situation. Why would I have my money out there dangling?
Well,
Where
yeah. So that's all part of that system. And we did talk about that, having an exit strategy. And I have many different courses that I've developed over the years, and every single one of them, I really emphasize that need. It's probably the most critical component is that you have an exit strategy so that if the markets stumble, if your stock's uptrend reverses, you want to get out. That's going to really keep your confidence level up and keep your profits.
Yeah, you want to seal those in. I think that's, we talk about it a lot too. The system that we're unveiling, it's it helps you to get in, but I think the hardest part for most investors is when to leave, when to move to cash, when to start. Maybe if you have a pretty good risk appetite, when do I start looking to short stocks and that kind of thing. But ultimately, regardless of what you choose to do, you have to figure out a way to dig in and find out where those pockets of strength are so that you can at least know going in that you're in sort of a winning group. You're like on a winning team. So your chances, yeah, you might lose that next game, but your chances are better that you're going to win just because you have a better record. And that's why it's really important to figure out which ones are in the lead and which ones are not.
Yes, I think we're going to get more into that too as we evolve today.
Yeah, and today we're going to, after our break shortly, we're going to start by looking at one of the other pieces of the puzzle, and that is momentum. And, we've like I said, we'll look at some ETFs later. After that, I'll focus a little bit more on the momentum that I'm seeing there. But it's just three pieces right now. Right now, we have our pink line chandelier exit. We have our 50-day simple moving average, which is, I know you live and die by that, Mary Ellen. And then now we're going to introduce
maybe
momentum.
pull up the chart.
Yep. And so now we're going to introduce that momentum piece. So stick around. After this break, we will start looking at momentum. All right, and we are back to introduce the next piece of our toolbox, which honestly, our toolbox isn't that full. And that's what we're talking about today, about keeping it simple. So we've introduced two tools on our previous shows. Definitely want to go back on YouTube and find those and watch them. This is going to be the third piece, and it is going to be all about momentum. And I'm just going to give you a quick definition of what it is. And Mary Ellen and I talked about this before, because typically when we're talking and looking at momentum on a chart, we're not necessarily looking at this momentum definition, I guess the momentum formula that comes out of this definition. But I want you to have an idea of what momentum, textbook-wise, it is, just the basic part. And really all you're doing is looking at your price changes. It's completely based on price. You're looking at the changes, not necessarily where it is on the chart, the price is on the chart. You're looking at what the changes are in that price over time. And so it basically establishes, it tells you your speed, you get that movement and that rate of ascent and descent. That's what momentum is all about. It's also synonymous, if you're in the math area, like I am, to slope, y equals mx plus b. So it's very synonymous with that. And it's also known as a rate of change, or an ROC. So sometimes you'll see that as well. It is considered a leading indicator versus a lagging indicator. And that means, we did look at the 50-day simple moving average, but it is slow moving. And while it gives you those trends that you really need to know, a lot of times it's not going to give you that forethought, that it's not going to give you that leading indicator, what it would do, which is telling you it would give you your signal before the moving average might.
Yeah, I would add to that and just say basically momentum stocks are those that are outpacing the broader markets, and you can go back either 3 or 6 months. You're looking for, a lot of our work, we look at comparing individual stocks to the broader market, and so these momentum stocks by and large are just a lot faster. And
right, you want to get in, like I said, we're still talking about that team. You want to be on the team that is has been winning for a while. So there's the simple formula, and this is not what our momentum oscillator is about. But I wanted you to get a basic idea. Momentum is simply the difference in price from one point in time to the current point in time. So if you wanted to know the 5-day rate of change or momentum, you're taking the price today minus the price 5 days ago, and that tells you whether it's higher or lower, just over that particular time period. One of the things, and I think I'm going to get over here into a chart. Let's do this, and we will do it in our lovely Chartwise woman style. Okay, so notice this big move up on the momentum. It just popped right up, and obviously it's because your price change is way different than it was earlier, and so that's going to pop that momentum to the upside. But why is momentum going down? I mean, you can see it right here. Why is that black line moving lower, but price is moving up? Well, that's part of the oscillator and what it does. Momentum, like I said, it's measuring slope, but it also, if you think about it, it's measuring the acceleration. So think about you're in the car and you are putting your foot down on the accelerator, but you're not moving it anywhere. You're just keeping it on the accelerator at the same pace. So you're still going forward, but you're going to flatten out on the acceleration, right? Your acceleration is slowed down because you're just holding your foot to the pedal. And then if you start letting it up on the pedal just a little bit, you might still be moving forward, but just not at the same pace you were before. So that's why we look at the momentum. So I'm going to pass it to you, Marilyn. I know you had done some great research this week on our data farm to table. I know you're going to be talking about ETFs. I wanted to just quickly explain to anybody who's really new to the program. An ETF is what's called an exchange traded fund. So many of you are probably familiar with your mutual funds, and it's made up of a bunch of different things that the money managers figured out. The ETF is similar, only it trades like a stock. So, you can see price changes during the day. Mutual funds, it's, you get your start of the day and your end of the day. So it's basically like a mutual fund, but it trades like a stock.
Yeah, that is absolutely right. It is these ETFs, exchange traded funds, they are designed to mimic, in many cases, another index, either the S&P and so forth. But now with the evolution, there are over 2,800 exchange traded funds, and they are getting much more exotic now, to the point where the underlying securities within these ETFs are now designed in some cases to capture different disruptive technologies that are out there in the market. Lifestyle ETFs are a big buzzword now. So they really have evolved. So what we're looking at here is using ETFs, a scooter report, and that's the StockCharts technology rating. And what you can do, I'm just going to back up here so you can see how I got into this. So on this initial interface page here, from this front page on StockCharts, you can simply go to this StockCharts technology rating report, and initially it'll show you these large cap stocks, but from here you can go ahead and ask to see the ETFs. I mentioned there are certainly a number of them. From there, it automatically will sort it by this scooter rating so that you're getting the better technically performing up here in the forefront. So this is another way to really capture strength, because you can see technology again is up here, well represented. Semiconductor is a big component of technology, and so forth down here. And what I wanted to point out to you is this is ARC Genomic. We can just take a quick look at this chart as an example. This, I had one of the portfolio managers on my MEM Edge show about 2 weeks ago, and he talked about this genomic revolution that's taking place with DNA and so forth. So this would be a way that you could potentially capture all of the new technology that is coming into place. So let me go ahead and pull up ARKG is the ticker symbol for this particular one, and I was going to see if I could pull it up using our Chartwise women chart,
I can do
because
that for you.
yeah, go right ahead and we can take a look. And again, this is just one of many examples, but a way that you could. So we can see that pink chandelier, I'm sorry, the pink line that we are using for the entry and exit, because the price of this ETF is above that pink line in a bullish fashion. It's poised to break out of a base. And then, Erin, you can maybe talk to some of the other indicators that we have on there.
Right. So we're really concentrating on momentum today. So let's just look at this right here. I'm going to get a nice, ooh, pink sounds good. All right. So back here, right, it said that's, we just crossed above that pink line. And if I draw this, it'll tell you, oh, it's too dark, or not light, it's too light. Let's try that one. Yeah, that's better. So right here is when it broke above that pink line that we're talking about. And at that point, there's a decision to be made. And to be honest, the first thing I'd notice is that the moving average is still moving lower. But look at what happened to our momentum indicator. It was bottoming and starting to turn up. That's what I mean by a leading indicator. It took a little longer for it to confirm by moving above the blue line. But this is another piece. And then you can even come down here and you can see that volume was even starting to get a little bit higher. And we talked about that a little bit in our first show.
Mm-hmm.
And there's that technical ranking you were talking about, that StockCharts technical ranking. And you can see it was starting to shoot up at the same time it broke above our pink line. So there were a lot of things. Yes, it hadn't gotten above that 50-day EMA, but there were a lot of things telling us in these pieces that we're going to be concentrating on and expanding upon as we go through the model. But that's a lead.
Yeah, why don't we take a look at TAN? That's another one that was on that scooter ranking for the ETFs.
Mm-hmm.
And I know, Erin, this is an area that you've focused on recently, given its relative outperformance. This is a solar focused. It's the underlying stocks within this ETF are focused on those companies that are in the solar energy space. So we can,
Exactly.
yeah. Good.
So here's what we can see about that. Where did price come up above the pink line in a possibly meaningful way? Well, it would be, let's say our last trade, we'd have been out more than likely. You'd have gotten out at around this time because you did lose both of this. And you can look at that volume bar, negative volume. That's your time to bail. I mean, there are a lot of things on here that told you that. But let's say you weren't in, and now it's popped and it's gotten above and closed above that pink line. And we have to look at what's going on with momentum at that time. What was going on with the moving average? Well, in this case, we got pretty much that confirmation of our system right off the bat because it crossed above both our blue moving average and our pink line. So that's already telling you that this is probably a good space to be. And here's that technical ranking. It's been, talk about a winning team. It was winning for that long. We had that, problem with the volume, but we did see that we could come back in, and you could already see momentum was starting to change. And what's going on right now with momentum? So we flattened out, but momentum started to turn up, and that was right about there. It looks like on yesterday's stock price. So we were already getting some great information here.
So yeah, and ETFs by and large are a wonderful way to diversify your portfolio. And as I said, participate in an area, in this case, solar energy. The other one was genetics. Rather than drill down and uncover individual stocks, you can participate in the broader move in a particular area. So they're a wonderful way to diversify.
Absolutely. And full disclosure, I do own a stock in this space. Let's see, called Sunrun. And I haven't been particularly happy about it, but it stayed above that 50-day moving average. So you can see momentum has faded. It's gotten below that pink line. It's now, we say, testing the blue line, but the blue line was still moving up. yes, momentum had started to fade, but we were still in a protected spot above that pink line. And it did drop below. My model and everything I have told me that I needed to stay in because I was still above the 50-day moving average. And, you know, we were still seeing decent volume. It kind of had moved a little bit lower, but look at this again. Winning team. It's on a winning team. The chances of it turning itself back around is far better. All right, well, it's time for our finish of the show, and it is going to be about, yeah, that happened. And Mary Ellen, I'm going to let you take that one.
Oh, sure. Yeah, let me go ahead and share the headline here. There's always just
There's always
interest.
something.
Yeah, there's always something out there. And today, it's all about a lovely couple from Maryland who played the lotto. They had itchy hands. The couple had talked about earlier in the day. They shared notes. Gee, if we ever won lotto, what would we do with the money? And then later in the day, they I don't know if you're familiar with that old wives' tale that if your hands are itchy, you're going to come into money.
Yes.
And
Left hand. The left hand, by the way, it has to be.
oh, is that right? I didn't know
Yes.
it
The
was
right
that.
hand itching means you're going to have company.
Oh, that is interesting. Well, they said that their hands started itching, I guess a month prior even, and they went out and bought lotto and they won 2 million. So I guess
Unbelievable.
there is something to that old wives'
Maybe,
tale.
well, it's a good thing they weren't using hand lotion.
That's right. So that is going to lead us into a stock today that this week, actually, we wanted to take a look at another way that you can combat the itchy hand syndrome, and that is with a cream. And
Yes, and a good momentum stock, which clearly you can see Procter& and Gamble has actually been doing quite well.
yes, they have many products in that area, many different moisturizers that will help you in a different way. Of course, we all would rather win lotto, I'm sure. But take a look at this gap up. Procter& and Gamble reported earnings, and the numbers were super good. Organic growth was high. In fact, their cosmetic products division, which would include those moisturizers, had 8% year-over-year growth for the most recent quarter, and the stock is very much in an uptrend. We talk about momentum. This has been one of the biggest winners among consumer staple stocks. We can see it's in a confirmed uptrend here. That gap up got huge volume. So I would say keep your eye on Procter& and Gamble for
Well,
another
and
way.
yeah, and people you notice too, you know, that you're going to see the staples. That's part of the consumer staples stocks. And I laugh because my mom, when we talk about the consumer staples like this, it's toothpaste and Tampax. That's that's where people are gonna always need those. And so those are, while they're not the sexiest place to invest, they do tend to be safer when the market itself is not doing well, because everybody figures, well, everybody needs toothpaste and Tampax.
Yeah, and Procter& and Gamble does have a nice 2.5% yield. We can take a look at a couple of other names if we have maybe just one other. No?
One more, but very quick.
Okay, Hershey Foods,
Oh,
HSY.
yeah. That's a staple for me.
Yeah, that's chocolate. So
Excellent. Yeah, and again, you're just looking for that momentum. You're seeing those price changes. They really do pay off. Momentum is an important piece of the model. Like I said, I'm continuing to refine it. I do have a scan right now available, so if anybody wants that, you can just text me. You can email me at erinh@stockcharts.com. All right, it was great to have you guys with us today.